This segment is sponsored by Hilltop Wealth Solutions.
Erik Brenner from Hilltop Wealth Solutions is a certified financial advisor with nearly 30 years of experience.
Well, he's back today to give us the lowdown on everything you need to know about capital gains. Take a look. Well, a lot of people are buying and selling. Let's talk about capital gains. You know, what are the things that we need to know with capital gains and exactly how does it work?
Yeah, so capital gains are if you sell something for a gain, you know, whether that's property, a stock, you know, other assets, you may be subject to capital gains. Now, it's important to know that not everybody pays capital gains. So, you know, there are income limits before you would pay a capital gain. And of course, with the Biden administration, that's been a big discussion on some of the tax law changes that they're talking about making.
Well, someone might have heard about capital gains, but not know the concept of long-term capital gains versus short-term. Share a little bit about the differences.
Yeah, so a short-term gain means that you sold something that you owned for less than 12 months, and that will be taxed as ordinary income rates. A long-term capital gain is you owned it for more than 12 months, so that's taxed at long-term capital gain rates. And, you know, one of the things that has happened, you know, with our tax system, I mean, we've got these kind of multiple streams of income are taxed differently depending on what they are. And then that really takes our tax system and makes it more complex, especially as someone is entering and in retirement.
Well, let's talk about the differences in capital gains. I know a lot of people will associate that with the sale of a home. Are there other ways that capital gains taxes come into play?
Yeah, there are other ways. And, you know, you typically will get a homestead exemption or a capital gain exemption when you sell your primary residence. But there are things like property. So we've seen people make mistakes in selling property or gifting it to their children while they're still living. And that could mean some potential capital gains down the road. And we're really watching this whole discussion around capital gains and what the new administration is talking about. They are saying that, you know, maybe under a certain level of income, we won't be affected. But we think that as inheritance and things that come about over the next many years, it certainly could affect one situation.
Well, since investing in assets typically requires a certain level of wealth, do you feel that capital gains taxes are affecting the higher level of tax brackets, kind of in that regard?
You know, we do think that it's certainly going to be an income limit. So they're talking about these income limits that, you know, if you make under a certain dollar amount, you will not be affected. But we just don't know, you know, we haven't settled on or we're close to really determining if and when there's going to be tax law changes and what they're going to be. One of the things, though, that I would certainly think about is, you know, with the global pandemic, we already had a lot of debt in our country. And with the global pandemic, that's added to it. And we are in a 40-year tax low. So people need to really project out what are their tax situations going to look like. And many retirees now are actually paying more in taxes than they did when they are working. That is a reality that we are seeing, and we don't see that going away.
Well, you talked about being in that tax low, but also having to project for the future. You know, how would you advise someone going forward with any potential tax law changes?
Yeah, so what we do is we think, first off, understand what really would affect you. Oftentimes people, you know, get hung up on certain tax law changes and it really doesn't affect them. Secondly, the bigger issue is it's been told for many years, you will be in a lower tax bracket when you retire. And I'll tell you, Jackie, we just don't see that for everybody. Now, some people are in a lower tax bracket, but a lot of people, what happens is they retire, their bracket dips down, they pay hardly any taxes, and then all of a sudden, because of required minimum distributions and so forth, it now bumps up and it goes up from there. So they really need to pay attention to projections, and that's one of the things that we do often, and we do it correctly, is projecting what their taxes are going to look like.
Well, Erik, you always bring a special offer to our Hometown Living viewers. What do you have to share with us this morning?
Yeah, so if we were to sit down with someone initially and put together what we call a roadmap, that would be a $1,500 to $2,000 cost. And we're offering that up at no cost to the viewers. And all they need to do is call 574-212-0446 that's on the screen. You can schedule a 30-minute call with one of our wealth advisors. We'll find out more about your situation and then determine, does a roadmap review make sense for you? We'll review your taxes, your risk tolerance, your Social Security strategy. We'll really take a look and determine, do you need some help in those areas?
Well, Eric, thanks so much for joining us here once again on Hometown Living.
Thanks, Jay.
For that complimentary retirement roadmap, give them a call at 574-212-0446 or head over to hilltopwealthsolutions.com. Coming up, hang on.